The December figures, does this mean that business conditions are slightly improving?
I'm afraid not. The business confidence index is very much in negative territory. So the 1 point improvement we've seen is an improvement of a very low base. We need to see the index at levels in excess of 100. If it achieves those levels, then we would be seeing broad-based economic improvement. We would be seeing job creation to the types of levels that are meaningful in our economy. But while it remains close to 90, these are not good levels to start a new year on.
Very bad news there indeed, Neren. But what are the main contributors to these numbers, and what do they tell us about prospects going forward?
Well, to emphasize the extent to which this is a limited gain, if one could even categorize it as a gain. In November, we had all the sub-indices that make up the BCI render negative or neutral readings. In other words, there were no positive contributors to confidence in November. It was a particularly dismal month.
Absolutely.
When
with
one
all the
looked
strikes
at,
and everything, yeah.
Quite right. And if you didn't have a strike in your industry, you were still reeling from the impact of a strike in either your industry or related industry. So in December, we did have a few sub-indices turn positive. And those sub-indices which have been driving this 1 point improvement include manufacturing, exports, vehicle sales and construction.
But how did they survive amidst all the turmoil in the economy?
Absolutely. We have to look at the BCI in terms of its methodology to understand that. Unfortunately, it's a fairly complex methodology. The BCI is just not a positive and negative movement from month to month. It is measured against a long-term trend. And that is why it's very sticky. If it starts to improve, then that is a real improvement that we're experiencing. And these positive indications are coming off a low base. In some cases, they're not dramatic positive improvements, they're marginal. The ones to watch, of course, are manufacturing and exports. If those continue to develop into stronger positive improvements in the coming months, then that is the type of improvement we would like to see as a chamber.
So however, it's all dependent on them.
On those two in particular. Unfortunately, whenever they've improved in the past, especially in the last 2 years, they've not been able to sustain those improvements. So they haven't had a good history for us to pin our hopes on.
To actually rely on them. Now, job creation, as you've mentioned, Neren, remains critical for South Africa. And with the expected influx now of new high school leaver entering a job market, does these numbers raise any hope for them?
I'm afraid not at this stage. I think when one looks at the prospects for school leavers, one has to cast an eye to the employment tax incentive scheme that government has introduced. The scheme has just been introduced, so it's still early days to see dramatic uptake from the side of business. I think most businesses are still trying to understand it.
Many people are against it as well. Yeah.
Quite right. We still have a lot of lobbying against it. But businesses do appreciate the scheme, and certainly our members have indicated that they are very keen on the scheme. But it all depends on the process to participate, how easy or difficult it is, and what the real incomes are for business. And lastly, what's going to happen post-2015, because the scheme is only in place for a very limited period. So that, I think, is more important to school leavers in terms of their prospects.
All right, and finally, Neren, with the US announcing last year that it's going to start cutting back on its bond purchases, how will this affect economic growth in the new year?
Well, that is the key global risk right now for emerging markets. And we've seen over recent months how it has dramatically impacted our currency. We are hoping as a chamber, and I hope it's not a hope against hope at this time, that these impacts or the vulnerabilities that South Africa experiences in the face of tapering have been exaggerated. The South African economy has proven to be very resilient in the past. It has overcome a number of challenges which people thought were going to throw it off kilter in its stride. So let's hope that the tapering of quantitative easing is one of those challenges, that we can deal with it in our stride. Obviously, while the risk is out there, analysts and investors are going to look with a very critical eye to the vulnerabilities in our economy associated with tapering. So our current account deficit, our currency volatility, our accumulation of reserves, all of those are going to be keenly looked at. So once the tapering risk is managed.
How much time are we looking at here, Neren? I mean, already the rand has dropped at 20%. That's an all-time low. I mean, how much time are we looking at for the economy to get back into, productivity?
Well, each time we start a new year, we hope that that is the year that's going to dramatically turn things around. But the last 2 to 3 years have shown that this is a very slow recovery, a very protracted recovery. So we entered 2014 with stronger optimism than we have in recent years.
Absolutely.
And that is buoyed out by the fact that even our key trading partners and developed economies, which have suffered substantially in recent years, also enter this new year with better prospects.
Absolutely.
The key thing for South Africa is, can we align with those trading partners to take advantage of the opportunities in those economies?
And also sustain them. Thank you so much.
Right.
That was SACCI CEO Mr. Neren Rau. Well, time now to take a look at your sports news. Here's Kendall.